Bank of America. Let's dig deep.
In July 2023, regulators hit the second largest bank with 3 violations on the same day, charging 35 twice for the same failed transaction, promising credit card rewards to over 10,000 customers and never delivering, opening accounts without consent. 250 million total, 100 million back to consumers. The bank fined for withholding rewards is launching a redesigned program in 8 weeks. The bank that acquired the largest mortgage lender for $4 billion has spent over $40 billion resolving the fraud that came with it. A business deposited $13,000 in October 2025. The account was closed 3 days later with no notice. 5 months on the funds have not been returned. The second largest bank in the country, the best loyalty program among the 4, and a bank that holds $13,000 for 5 months without resolution. The bank as it exists today is the product of a 1998 merger between a Charlotte institution and the original California brand. The Charlotte chief executive was the acquirer in substance but took the California name, a Charlotte bank with a California identity. The current chief executive took over in January 2010, inheriting the integration of 2 crisis acquisitions, and has presided over roughly $80 billion in regulatory settlements while stabilizing the institution. In January 2008, the bank acquired the largest mortgage originator in the country for approximately $4 billion. It believed it was a bargain. What it acquired was the largest repository of fraudulent mortgage origination in American history. Mortgages originated to borrowers who could not repay them, packaged as investment-grade securities, with misrepresentations at every stage. The $4 billion purchase price has cost over $40 billion in settlements across 15 years. The Department of Justice settlement in 2014 was $16.65 billion, the largest bank settlement in American history at the time. The last major case settled in 2022 for $1.84 billion. The chapter is effectively closed. In September 2008, the bank acquired a major investment firm for roughly $50 billion. The wealth management integration became the foundation for the loyalty program and the high net worth strategy. In 2019, the bank won the California unemployment debit card contract. Roughly $32 billion in payments would flow through those cards. Then the pandemic arrived and exposed what the contract had not prepared for. But the 3 violations that landed on the same day in 2023 tell you more about the current institution than the crisis acquisitions do. The first violation was the double charge. When a transaction was declined for insufficient funds, the bank charged $35. If the merchant resubmitted and it was declined again, another $35 was charged for the same original transaction, $70 for a single failed payment. From 2018 to 2022, $100 million in consumer harm. The second violation was the promised rewards. Over 10,000 customers were offered sign-up incentives that were never delivered, decisions made on the basis of rewards that did not arrive. The third violation was opening accounts without consent, the same category that defined the competitor's fake account scandal. Different scale, tens of thousands versus 3.5 million. But the same fundamental failure. The bank had already ended sales incentive programs 6 months earlier, a proactive change the regulator acknowledged. 250 million total, 4 months later a 12 million fine. Over 400 loan officers had failed to collect required demographic data from mortgage applicants and falsely reported that applicants declined to answer when they were never asked. The data used to detect discriminatory lending was systematically falsified. During the pandemic, the unemployment debit cards issued by Bank of America without chips were targeted by fraudsters. Automated fraud filters froze legitimate claimants who could not reach overwhelmed support lines. People who were owed unemployment benefits could not access them because the bank's system could not distinguish real claims from fraudulent ones. The bank is not liable for all $19 billion in California fraud. It is liable for freezing legitimate recipients and failing to investigate error claims within required timeframes. Class actions were certified in 2025. A business deposited $13,000 in October 2025. The account was closed 3 days later. 5 months of branch visits, emails, and executive contacts produced no resolution. But the products and the loyalty architecture tell a different story from the complaints. The loyalty program at $100,000 or more in combined balances across deposit and investment accounts provides a 75% bonus on credit card rewards. On the premium card that turns the base rate into roughly 3.5% on travel and dining and 2.6% on everything else. The annual fee is $95, with 100 airline credit effectively reducing it to nothing. For a customer with 100,000 in the investment platform, no competitor matches the integrated return. The redesigned program launching in late May 2026 expands to include automotive discounts, entertainment access, premium travel experiences, and subscription credits. A new entry tier brings customers with less than 30,000 into the ecosystem for the first time. The bank fined $30 million for withholding rewards is betting its growth strategy on a program that promises 150 to 4,000 in annual value, depending on tier. The opportunity cost is the critique the marketing will never mention. 100,000 sitting in the bank's savings account earns below 1%. The same amount in a high-yield account earns 4 to 5%. The yield gap can exceed 3 to 4,000 a year, which is more than the program's documented benefits. The program makes financial sense when the 100,000 is in the investment platform where the opportunity cost is lower and the integration adds real value. Not in the savings account where the bank earns the spread. The overdraft fee at 10 is the lowest among the 4 major banks. The competitor charges 34, another charges 35. The account with no overdraft fees at all declines transactions rather than charging. For customers who regularly overdraft, this is the most protective option available from any major bank. The mobile application is consistently rated among the best. The branch network at 18,000 locations is broad, but the verdict depends on which customer profile you match. Bank of America is the right institution for the customer with 100,000 or more in investable assets, willing to use the investment platform, who wants to maximize credit card returns through the 75% bonus, and values the seamless connection between banking and wealth management. At that profile, no competitor matches the integrated proposition. The 10 overdraft fee is genuinely better than every other major bank. The mobile application is excellent. The branch network is broad. The account with no overdraft fees provides the most consumer protective checking option among the 4. But Bank of America was fined for 3 simultaneous violations in 2023. Charging customers twice for the same failed transaction, withholding promised rewards, opening accounts without consent. 13,000 deposited into a business account in October 2025 has not been returned 5 months later. Over 400 loan officers falsified mortgage. Demographic data. Legitimate unemployment recipients could not access their benefits because the fraud filter could not distinguish real claims from fake ones. The anti-money laundering consent order remains active. For customers below 30,000, the loyalty program provides convenience without competitive advantage. The savings rate is below market. The checking fee at $12 a month is waived at $1,500 minimum balance or qualifying deposits. The test of whether the 2023 remediation was genuine is whether the redesigned program delivers what it promises. The bank that spent $40 billion resolving the fraud it acquired for $4 billion is betting its next chapter on a loyalty program launched weeks after the research for this video was completed. The countrywide chapter is closed. The triple violation is settled. Whether the compliance culture holds is the open question. Every choice is a trade-off. At least now you know what you're trading.